Hey, what's up, y'all? Welcome back. I am Van. We are all the LFR family. I appreciate y'all. Please do me a favor, hit the like button and the bell and sub and all that other stuff, or not. Allow me to prove myself, worthy of your sub and your like and all that other stuff. That's cool too. I really respect and appreciate this next gentleman we're about to check out. His name is Patrick Bet-David, and he has a podcast. Well, he has a channel called Valuetainment, and something that he helps people do. He helps people with business knowledge. He helps you. He provides a great deal of information and instruction on how to build, how to run a business. He's a wildly successful businessman, and he has a whole lot of heavyweights on his platform all the time. So I want to check this guy out because he's talking about the gentleman, Michael Saylor. What's his name? No, it's not. Sam Bankman from FTX, the guy that was I think he was valued at like $20 billion at one point. And now, sheesh, I think he's at like 100,000.
Did the guys in the industry like yourself, the heavyweights, were you aware that something was going on at SPF or no?
Yeah, I think that you have the Bitcoin community opposite the crypto community, and then there's been a low-grade sort of boiling guerrilla war between the two camps for the past 2.5 years. And Sam is kind of like the poster child of the crypto world. Right? Sam makes billions of dollars on an unregulated exchange offshore. He makes billions of dollars issuing his own air token. He spends hundreds of millions of dollars giving to the crypto lobby and to politicians. And one of their messages is, Bitcoin is bad for the environment. It uses too much electricity, but not to fear. We have a staked air token, which does the same thing as Bitcoin, and it's environmentally friendly. So, we've always seen that going on. And I think that, the Bitcoin community would say, there's something ethically broken about being able to issue your own unregistered security, right? They call it committing the sin of shitcoinery.
Yep.
Right?
Yep.
So Sam and most of the people in the crypto world were always guilty of the sin of shitcoinery, or pumping and promoting unregistered securities. And that was obvious. I think, that was obvious to the chair of the SEC, to most politicians, right? The phrase that pops up over and over again is the vast majority of all crypto tokens are unregistered securities. But I think the diabolical twist in the FTX story that none of us saw coming, but it is particularly diabolical, is so Sam creates, $8 billion worth of air token with SRM and FTT. Then he issues himself locked token, secret locked token, marks it up on his balance sheet by another $4 to $8 billion and calls it $16 billion worth of collateral.
What?
Okay. Then he goes shopping for a bank to give him a loan against this. Well, if I took $1 billion of Apple stock and I went to a legit bank, Bank of America, JP Morgan, Goldman Sachs, I say I got $1 billion of Apple stock, they would say, well, we will give you collateral value for up to the amount you have, or 5% of the daily trading liquidity on a legitimate regulated exchange.
Are y'all following? I'm gonna tell y'all right now, it's very difficult for me to follow along when they're talking this money talk, man. But I'm trying my best. And if you want to help me out in the comments, man, I would love that. But I'm just trying to follow along. What's up, guys that are joining me? I appreciate y'all. I'm just trying to follow along because I want to understand this whole FTX thing, because this is huge. Huge. A lot of people lost a ton of money. And they're saying that the guy that was running the show, he was very crooked. So that's why they're talking about him right now.
So if you show me a security that trades $1 billion a day and you have $1 billion of it, I might give you $50 million of collateral value. And that means you could borrow $25 million against it at 50% loan to value. But I'm going to margin call you if it moves a tick. So it means, practically speaking, $1 billion of that legit security is probably going to give you $10 million worth of a loan.
On $1 billion.
On $1 billion.
That's 1%.
Okay, right? Because the gating factor is, what's 5% of the trading liquidity of that token or that asset. Because if I have to dump that thing in the market, I want to sell the entire position without moving the price.
Sure.
Okay, so that's the traditional world onshore. What Sam did was generated $14 to $16 billion worth of Solana, FTT, Serum, and then he went shopping for a bank to give him a loan. But he didn't want, you wouldn't get a loan from Goldman Sachs on it. No one's going to borrow you money, at least no non-crypto company.
I knew that this fake money was going to come back and bite people in the tail. I knew it. There are some people who won big and are still winning. But there are some smart people who pulled their funds out before it was too late. It's I'm not even going to tell y'all how much I then lost in crypto trying to play the game. But it feeds off of people like myself who who don't have the backing, the financial backing, and who don't have the knowledge to play the game, because it's a game. That's exactly what it is. It's a game. And if you're not one of the powerful people that are setting up the whole play, then you're out of it. You're out of it. As we can clearly see, even the powerful people are getting buried by trying to overexert themselves. What he's saying about Sam Bankman, what he did, that sounds criminal to me. I have $8 billion of crypto. I'm a leverage that and call it 16 billion. Then I'm gonna go to the bank and get them to look at that and give me 1%, and they're giving me 10 million loan, a $10 million loan off of it. Like, come on. Only the rich and powerful can do this and play this game.
So what he did,
it's not for us, in my opinion,
was he went to himself. He runs a bank called FTX. He applied for a loan from himself. He granted himself the loan.
For a loan from himself.
Well,
right?
secretly applied. He didn't tell anybody, but when they say, well, Alameda had a margin account and the margin position was slightly bigger than I thought, what he means is, oh yeah, they pledged a few $1 billion of air token, gave themselves a $10 billion loan, and they extracted, even if he had pledged $15 billion worth of air token, giving yourself a $10 billion loan means that you gave yourself about 100x the collateral value you would have got on a regulated exchange onshore. So what he did was, in essence, extract $10 billion of real stuff, dollars, Bitcoin, saleable assets, and he pledged $10 billion worth of air token stuff. And of course, it's a double diabolical thing. Here's the problem. So I create a token. I have 300 million tokens, and then I basically trade it with myself. Like, I give it to you, and you work for me, and you give it back to me. Then I lean on it, so I lever it up 10 to 1. On FTX, you could lever it 20 to 1. Then I borrow your money. You're a depositor, so I take your money. You have $10 million. I lever it up 20 to 1. I have $200 million. I buy my own token. I drive my token up by $5.
Shout out to the one person that answered my question on my title. Shout out to you, Drew Bittles. What's up, everyone?
$5 times 300 million makes me 1.5 billion in collateral. I post the collateral, and then I withdraw $1 billion of 100,000 people's money. I put it in Alameda, and then Alameda gives a $3.5 billion loan to Sam, right? He gave $3.3 billion to either himself or his personal family holding company. So here's the diabolical twist. I didn't just generate $10 billion of an unregistered security to dump it on the unsuspecting retail. That would take me 500 trading days, dumping 20 million a day, right? He didn't do that. What he did is he generated $10 billion in unregistered security and then just borrowed $10 billion secretly from his depositors, and then went and gambled it, traded it, spent it, lost it.
Wow.
And that is it's particularly impressive.
How do you, so here's the question. You know how he goes and he raises the $2 billion, okay? And he gets the $2 billion from not small people. He gets it from the best of the best of the best, right? You got BlackRock, you got Insight. You know the names.
Yeah.
I don't need to give you the names. You know the names. So
major names, right?
Then they don't get any seats, board seats in return. These are very, very smart people who are seeing this. Are they just as responsible for the fall of FTX as Sam Bankman-Fried is?
The Bitcoin maximalist would say that the problem in crypto is greed, arrogance, and foolishness. Okay, anybody that's investing in it is either greedy, arrogant, or foolish. So there's.
You hear that, right? You heard what he just now said. Anybody that's investing in crypto is either greedy, arrogant, or foolish. Greedy, arrogant, or foolish. I think I was on the foolish part. I was a little foolish. Thinking that, hey, I'm going to try out this investment thing. And crypto seems to be the new thing on the block. And I can learn something about it. Everybody seems to be making money from it. Why not try it? No one's losing. It doesn't seem like anyone's losing. Not at that time. You know, and this was only like a year ago when I was in it. But my gracious, arrogant, greedy, or foolish. Yeah, I have to say I was foolish. I don't know if I'm arrogant. I don't think I'm arrogant. And I don't believe I'm greedy. I might be, though. I don't know. I want to go to some type of counseling, some type of therapy so I can understand that part of me. I haven't yet. You know, I actually went to the doctor and told my doctor that I wanted to see a therapist. And one of my doctors told me that you don't need to see a therapist. She told me I was fine. I don't know what that means exactly. Like everyone is fine, but everyone could use someone who's trained to talk to them about certain things.
There's three constituencies that got taken for billions of dollars here. The VC investors put $2 billion into an offshore exchange. The exchange, just to be clear, was unethical and illegal from the very beginning. It's illegal to do what they did in the U.S., and it's unethical if you think I am front-running my customers, issuing a token, manipulating the price of the token, dumping it on them.
If you did that in stocks, you're going to jail if you front-run.
It's absolutely illegal.
Yeah.
Right? FTX was its own regulator, its own market maker, its own exchange, the issuer, right? All at the same time. This is such a and the hedge fund. Too much conflict of interest. So, but the three constituencies are the VC that put the $2 billion into FTX. They were supporting basically an offshore, unregulated casino, running in opaque fashion, account of the interest of its own customers. They didn't ask for a board seat. They didn't do due diligence. They were chasing.
Hopefully you guys are learning something from this. That's the whole point of me checking this out. I want to learn something from it, but I also want people who enjoy the channel as well to learn something from it. And if you do, and if you are enjoying this, feel free to share it.
What they thought was insane gains, right? FTX is showing a company that goes from 50 million in revenue to 500 million in revenue to $1 billion in revenue, and they thought they just had the next great thing. So, Sam lies that any con, right, is like, I think I'm getting a deal that's too good to be true, and the con man is lying to me. We're all lying to each other, and so that's the first $2 billion goes down the drain. There's another $4 billion or something like that in just loans made by crypto industry. I think Alameda borrowed hundreds of millions and billions of dollars from Genesis, from Three Arrows, from Voyager, from Celsius, from BlockFi, etc. So it's like if you start with this fiction that FTT is a real thing. If I create, again, like yo-yo token, and I manipulate the price up to $10 billion by trading 2% of the float, if you think it's a real thing and I act like it's a real thing, then I pledge it as collateral and you give me real stuff for an air thing. And so there's like $4 billion of that, and they went and they lost half of that. That
Wow.
was part of the reason that Voyager and BlockFi going bankrupt. And the reason that Sam wanted to bail them out is he didn't want to actually have the loans called, right? He was actually trying to buy BlockFi and buy Voyager with FTX equity, which of course is fraudulent and worth nothing. But if I borrowed $1 billion from a company and they want the money back, and I can simply give them $1 billion of equity, take over the company, and not pay the loan back, I can roll the entire fraud forward. So that's the second. The third is,
What's happening is these people are playing with money that most bloodlines won't see in generations. Like our families won't even touch or see, or even, like, I'm talking about before taxes. for generations. They are just betting and losing and just playing with money that we can't even fathom. I mean, if this is your thing and you can afford to do it, go for it. I think you should go ahead and be able to play whatever sport you want to play, because apparently this is a sport. They're playing with their money. But I think bringing the little people into this and having us believe that we can win from it, although I do see some people who actually believe in it because they've done some great things with it. One of my people purchased a car with it, with the crypto that they invested in. So shout out to them. They made some good decisions. But for the most part, man, this is rich man's game. It was a wealthy man's game, not even a rich man's game. It's a wealthy man's game. And they're saying that if you want to get into the game, then you have to play. If you want to be rich, you want to be wealthy, then you got to play our game. But the house always wins. So the people who are setting up these coins and, running them up, making you think that they're successful, that's your money that you're losing.
This is also diabolical. FTX said, we're built by traders for traders, and Sam bragged that they only charge like 3 basis points trading fee, and he was 30 times cheaper than Coinbase or much cheaper than Binance. So he's stealing customers off of the other crypto exchanges by, in essence, offering near free trading. He's not trying to make money off the trading. He's trying to actually get the assets on his platform, because once he had the assets on his platform, he basically used FTX like his own personal piggy bank. It's like there's $10 billion there. Everybody else is going to get wiped out if their margin positions trade down 20% for a minute, except Alameda. Alameda has God mode. They never get margin called. So in an exchange, like in the U.S., it's illegal to go more than 50% loan to value. That means you're kind of like, you start with $1 million, you borrow $500,000, you're 1.5x levered. Okay, well, FTX started with 100x leverage, and then they backed it down to the responsible 20x leverage, which means that you post $1 million and you can take a $20 million
insane. Okay. Who allows that?
Now, here's the insane. What if I put $1 billion of air token, FTT, on the exchange? I recognize you and I let you take a $10 billion bet. Like, whatever, you took a $10 billion bet, now you withdraw $4 billion of real cash and you use that to buy property and buy everything under the sun. So Sam basically, he scraped billions from unsuspecting investors in Silicon Valley. They should have known better. He took billions from crypto hedge funds and crypto banks like BlockFi and Voyager. They should have known better. And then he took probably $10 billion or more from depositors on his exchange. They have the best argument. It's like they were staring at terms and conditions that said he's not going to rehypothecate or use their assets. And he just, he lured them with the promise of cheap trading, high leverage. And, if you thought, well, Sam is manipulating the price of FTT and Serum and Solana, and he was, right? That's illegal and unethical, right? It's a pump and dump scheme. We talked about this before, but
that's what and that's what I thought it was, a pump and dump. They lift that, they run it up. Everybody's putting their money in it, thinking that they're going to win. And then and if you was one of the first 100 or the first 1,000 people who get in, benefit. The other millions of people who get in don't benefit. Wow, that's a pump, man. So he ended up losing because he was crooked. He wasn't supposed to win after all.
If you accept the idea that crypto tokens that are issued by some offshore, dude are okay, then you're thinking, well, I guess I want to go buy some of that and get behind Sam and Alameda because they're going to drive the price up. And I think Solana went from, $3 to, what did it go to 50? It went way up, and FTT went to $50 a token or something. So you could have made a lot of money trading those tokens, but you probably would have wanted to go to the FTX exchange because guess what? Newsflash. It's illegal in the U.S.
More to your future looks bright hat. Click over here.
What y'all thought about that, man? I know that wasn't what we normally talk about on this channel, but you know what I mean? I was in the mood to learn something, and I don't think I did. I don't think I did, man. I'm just keeping it a buck with you. If you did, man, let me know what you thought about it in the comments, all right?